Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for our Outlook 2023 series, we have Eric Robertsen, Global Head of Research and Chief Strategist at Standard Chartered Bank, to discuss global macro investment themes and their implications for asset allocation and portfolio management. Eric, it's great to have you with us. Welcome to Trade Talks.
Thanks, Jill. Great to be with you.
You got it. And let's start with U.S. inflation and the spillover and rebounding effects that you're seeing in developed and emerging markets.
Sure. Look, this is the key question still for markets and investors. Will inflation in the U.S. come down? Will it come down globally? We do think it will, but it's going to take a bit more time. And I certainly don't think we're getting back to 2% inflation where we were pre-COVID in the very short term. So I think we have still another year where inflation is going to be a challenging macro input into investors' decisions.
And speaking of inflation, how are the Fed's rate hikes impacting other countries abroad?
This is a great question. I think one of the things we have to think about is what is causing inflation around the world. In the United States, I think it's very clear that it's a demand side issue. In Europe, it's very different. It's very much a function of, supply shocks and the impact that has had on pricing for food, energy, et cetera. I do think that the Fed's rate hiking history over the last, call it 12 months, is going to have an impact on demand. So you will see demand in the US slow. You will see inflation come down. In other parts of the global economy, it's a question of how soon those supply chain challenges can get resolved.
I was just going to ask you that. Are you starting to see any sort of rebound or, anything being alleviated as a result of the war in Ukraine? Or do you think it's going to be really challenging over the winter for many of these countries?
I do think it will be challenging. We don't expect the war in Ukraine to be resolved tomorrow or the next week. So that will be a lingering concern. The good news is that we are starting to see some easing of supply chain pressures, and whether that's shipments coming out of China, other parts of North Asia, Southeast Asia, and other parts of the world. And you see that reflected in commodity prices, by the way, for a number of commodities, whether it's energy, whether it's food prices, metals. We are seeing much lower prices relative to the highs that we saw earlier in the year. And that could only come about if supply was reaching end markets.
Let's talk about your global macro investment themes and asset allocation and portfolio management. With that backdrop, what are you looking for as it relates to 2023?
I think the first thing we have to acknowledge is that from an economic growth point of view, it's going to be a very difficult year. We are expecting either recession or near recession conditions in a number of major markets, whether it's the US, UK, and Europe, or many emerging economies. Now, to offset that, we do believe that the Fed's rate hiking cycle and a number of other rate hiking cycles globally are nearing their completion. And I do think that that will offer some relief to markets over the course of 2023. But before we get to that relief, I think there is this unresolved question of how deep the recession will be. And so I think it's a challenge in the first quarter.
And Eric, money managers, they have to put their money somewhere, right? So when you think about investment and trading strategies across major asset classes, where do you think they're going to be allocating these funds?
The first comment I would make is that after the surge in interest rates that we've seen and the widening in credit spreads that we've seen over the last year, we do think a number of fixed income markets around the world are starting to look relatively interesting. The long end of the yield curve in places like the US, parts of emerging markets are starting to offer investors yield. Latin America is another place where we have much higher interest rates than we've had for a number of years, and that's giving investors some interesting opportunities. So we do think it is time to slowly start going out the risk curve and out the duration curve. We also think the dollar has put in a long-term peak. So we're starting to look for opportunities for trading or investing in that dollar depreciation story.
All right, Eric, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jill.